Good evening, everybody. Welcome to the Note Nation Top 40 Tour as the Note Nation bus rolls into Cleveland, Ohio tonight, everybody. Honored to have you guys here that are joining us live and watching us either also across Facebook, YouTube, or catching us on the replay as well. We do encourage you to ask questions about what we're to be discussing tonight and clarifying. And I don't care if you're watching this live or catching the replay, ask the question. We're glad to comment and respond anytime that you guys are asking. So once again, honored to have you all here. We are just about the halfway point of our top 40 markets. Excited to roll into the rock and roll city and really discuss what's going on. But we've got a variety of people that are joining us and watching us, whether you're local to the Cleveland market or you're from across the country, different parts, investing in Ohio and Cleveland. You'll have people join us. We'll be discussing the statistics, the numbers, what's going on in the market right now. Obviously, we're waiting on some changes to take place. We expect some big changes here over the next couple months. We'll talk about the second half outlook and where and when to find the opportunities and where they're going to be at, guys, out there. So we'll also discuss how to get started in making sure that you're capitalizing on the amazing deals that are happening. I was actually speaking with a hedge fund manager in California. He says it is going to be a bloodbath here over the next 6 months. He's already seen things crazier than he's seen in a long time. So if you're not ready to dive in and capitalize, you're going to be left holding the bag and wishing. So our mission at We Close Notes, guys, out there is to help investors to accomplish their dreams and increase their wealth through debt investing. It's one of the things we've been doing for over a decade now, and very, very happy with the amount of investors that we've helped, whether A, investing with the funds with us, or B, they've gone out and done this themselves. We're honored to be a big part of so many real estate investors out there. So if you don't know who I am, I'm Scott Carson. I'm across the country as the Note Guy. I've been an active real estate investor since 2002. Over 16, 17 years in the finance, mortgage, and debt markets. I've purchased over $500 million in debt for my own portfolio and over $1 billion with other investors. I'm the CEO of WeCloseNotes.com, Inc. It's my company, and you can always find out more information on what we do at that website. I've been working with real estate investors and teaching them how to capitalize in distressed markets since 2004 in a variety of states out there. I currently am invested in over 30 states, but maybe you've heard about me as I'm the host of the Note Closing Show podcast. There's over 30 million listens since we got started. So like I said, I invest all across the country, but Austin, Texas is home for me. But I do have a lot of actually real estate up in Ohio right now that we've acquired and worked through and done a variety of things with. But anyway, why am I doing this? Why am I spending time for over 2 months highlighting 40 different markets out there? People ask me that all the time. It's because I love to help investors out there. I think we all get such a microeconomic look at our market, but there are often better deals in other cities, other states across the country. And so one of the things that I did over a decade ago was I literally went on the road and spent 3.5+ years traveling the country, buying, networking, talking with, speaking, meeting with banks in a variety of states out there. And so one of the things I thought, hey, would be great to do again is do this virtually, since we can't really jump on a plane and do it in person. So I do love helping people, investors, banks solve problems. We've got a lot of problems out there. A lot of borrowers are facing some difficult decisions right now. And I do this because I do believe this is the opportunity. I was fortunate enough to go through an amazing opportunity 12 years ago and didn't think we'd see something like this happen again. Well, we are seeing something like this happen again. And it is an opportunity that you have to be able and willing to capitalize on, because there's a lot of amazing things to happen. I'm also doing this because I was once a distressed borrower back in 2002, 3, and 4, struggling, facing foreclosure, and able to pull my assets out of a sling. And so I empathize with those 4 million plus Americans right now that are in default, another 4 million plus borrowers out there that are going to be in default in the next 30 to 60 days out there as well. So there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was once impossible. And there are a lot of people that when they bought their first house, that they thought that was impossible at some point. Now, they've also had that dream turn into a nightmare, being laid off of work and having, the creditors start knocking on the doors. So I love helping people, and I like the fact that I can make money helping people out there. So hopefully you are the same way as well too. So I do have a big goal of helping over 1,000 investors in the next 12 months capitalize on the note markets that are available out there. There will be and is currently a lot of opportunity for you guys to take advantage of. So let's talk about where are the opportunities. Everywhere, everywhere you look. I don't care if you're looking at self-storage, apartments, single-family homes, mobile home parks, office buildings, hotels, motels, whatever it is, whatever you're looking for, there are opportunities out there. And the beautiful thing about what we'll be talking about tonight, I don't care what color of skin you have. I don't care what your experience, your background, or school of hard knocks that you went through. If you want to do something good for your family and help start changing generational wealth and start doing things, this is the opportunity. Don't care what your credit is. Don't care how much or how little investment experience you have. There are some opportunities right now. I don't care. Also, there was a lot of business owners out there that are struggling. We all know this, that are looking for something else to do. That have had to close down. They're looking for opportunities, something to try to make lemonade out of lemons. And what's going on right now is an amazing opportunity to help all sorts of people of all races, all backgrounds. And really, as I say, racism-free investing is also an opportunity. Like I said before, banks don't care what color skin you have. They want you to just get taken care of in a variety of fashions. We'll talk about that tonight. So if you ever want to do something good, whether you're white, black, yellow, Latino, Asian background, Indian background, I don't care what it is. This is an opportunity. It's an equal opportunity for everybody if you're willing to do the things that you need to do. So let's dive into what the national numbers say about everything that's going on right now, okay? Nationwide, this is as of June. The July's numbers aren't out yet. We're still seeing an 11.1% unemployment rate across the country. So 1 out of 9 workers are out of work. All right, 40 million people collecting unemployment roughly. 52% of small businesses are expected to fail. That number gets worse every day as we see rollbacks, as we see states retightening back up, spikes again. It's just a big cluster for a lot of people out there. The big thing you need to keep in mind, though, is before this all took place back in February, March, 10% of homeowners, 1 out of 10 homeowners was already 30 days behind. They were already 30 days behind, okay? And you look at now, we see a default rate, not a behind rate, okay? The delinquency rate is 7.76. That's what the numbers came out most recently, about a month ago. So basically, 1 out of 12 homeowners is in delinquency. That means they're 90 days or greater behind on their mortgage. Will we see that number increase, or will we see it decrease here in the next few weeks? I don't know. I don't have an answer for you. It got better. It actually went down a little bit compared to June's numbers, but we'll see what happens here before too long. There are currently 4.1 million Americans currently in default, and there's also an estimated somewhere between 4.2 and 4.5 other homeowners, mortgage holders out there that aren't in forbearance, that are also in default, that have not reported. And that rolling phase between 30 and 90 days, that we could see the numbers spike to quite a dramatic amount. Now, if you think back to what happened over a decade ago, it took us 18 months from 2008, took us 18 months to get to 1.6 million defaults. It took us a good year and a half. Well, we're already 2.5 times that in less than 6 months. Is it going to get bad? Yeah, it's going to get bad. We see delinquencies all across the board, whether it's in subprime loans, it's reperforming loans, all asset classes when it comes to loans type are seeing an increase in defaults, okay? Lenders are bracing for us to see close to 15 million mortgage defaults. Now, hopefully it's not that bad, but it will be a repeat of what it was in 2008, 9, and 10, especially in 2010 when we peaked out at 15 million. I think we'll probably come in under 15, probably somewhere between 10 and 12. That's still a huge, huge amount of borrowers in trouble, and it's going to have a lot of negative impact on markets already that are still have not recovered. You know, you look at Ohio. Ohio has one of the largest percentages of zombie homes where people just walked away from their houses. And it still is difficult there. So you're going to see a lot of that. So let's look at the housing hardship. This is a map that we pulled off there, which is really a kind of cool interactive map. It talks about what the delinquency rates is on a state-by-state basis in the housing hardship. And when you look at Ohio has an unemployment rate of 10.9% across the board. Okay, it's the whole state of Ohio, 10.9%. The mortgage delinquency across the board is 6.64. So good that it's actually about a point less, percentage point less than the rest of the country, which is great. It ranks right in the number 21 worst off. Basically, there's a lot of people and borrowers that are worse off than people in Ohio. Okay, now Don't get me wrong, if you're struggling and having a difficult time, yeah, there's nobody worse off than you right now. We can agree to that. But to give you a bit of an idea how where Ohio ranks nationwide compared to everybody else, that's what you can see. Obviously your neighbors to the east in Pennsylvania, New York, New Jersey are a lot worse off. To the west, you have Illinois, you have Michigan. To the north, that's struggling as well. But there's a few states out there, specifically Kentucky, in Idaho, that aren't struggling at all out there. But let's talk about Ohio, okay? Now, when you break it down to Cleveland on a unemployment rate, you can see the unemployment rate is at 14% for June. Now, it spiked. This is the scary thing. Cleveland spiked at 22.4% in April, one of the highest rates out there. And it's started to come down a little bit. It's not the highest in the unemployment rate here, but at 14% unemployment rate for Cleveland, it's still a very impactful market. Now, remember we talked about in the last slide, unemployment rate across Ohio is 10.9, but in Cleveland, it's still 14%. Ouch, okay? So that's something to keep in mind for you. Now you look at what's going on around the rest of Ohio and some of the other counties. Cleveland area is at 14%. Cuyahoga County as a whole is at 15.2. Lake County, 12. Lorain County, 13.7. Medina County is at 11.1. The United States as a whole, 11.2 there on the unemployment rate. So you can see, hey, yeah, it is not as bad. Or it is a little worse there in in Cleveland compared to other places out there. Let's look for the foreclosure maps here, the foreclosure rates there, taken from Realty Track here. You can see, and the nice thing is Cleveland has 1 in every 6,500 homes are in foreclosure. That's actually less than a lot of other areas. But if you look at specific zip codes like 44125, where it's 1 in every 2,200, 44127, where it's 1 in every basically 3,000, 44112 is also 1 in every 3,000. It's there. You have obviously peaks and valleys. You have the haves and the have-nots. So there's really a discrepancy here right along the middle of the county, around Cleveland itself, where you see to the west, it's the haves, and to the east, it's the have-nots, those that are struggling. All right. When you look at the numbers, we've got an increase in pre-foreclosures, increase of by 20% month over month. The auctions are basically at zero because they've been stopped, suspended for a while. Bank loans are down 42% compared to the previous month. You look at the numbers here, see everything kind of came to a standstill in April for a while. May, June, slow down. So we still don't have the current numbers for July yet, but we expected to see a little bit more of an uptick, especially on the foreclosures and the auctions here. You see it's dropped very, very low on the foreclosure activity for Cleveland. Black Knight's a big company, comes out, a huge company that tracks housing. They came out and said basically, obviously, we've got their 4.3 million homeowners passed through their mortgage or in active foreclosure. We've seen it increase by 50% in the past 2 months. That was for April, May, and June. We're going to see an increase in that out there. A couple of things that you want to look at. Okay. 7.76 default rate, 30 days or more in default. Okay. The U.S. inventory here is at currently number of properties are 30 more days, 4.1 million. And then 90 days, but not in foreclosure, 631,000. I need to make that box a little square, more rectangular. That's what I'm trying to get at there, but there's another wave coming besides what's going on right now. Now, if you look at the map, a lot of people are scared. What's going to do? What are my options? What can I do to stay in my house? Whether I'm renting my apartment or a house, or I'm owning my house. If I've got a government-backed loan or I don't have a government-backed loan, what's my options? Well, Ohio is one of those states out there. There has been zero action taken on a statewide level, okay? No state or local moratoriums issued at all for all of Ohio, okay? It's broken down on a single basis. Now, there has been some changes. The FHA basically issued a moratorium, foreclosure moratorium that was supposed to expire at the end of June, all right? That's noted that has been delayed to the end of August now, okay? Foreclosures, evictions have been delayed to the end of August. It's bought a little bit of time with it being just the first week of August for the most part. So people have bought, this varies on a city by city, state by state basis in a lot of cases out there. All right, so keep that in mind out there. Now, we are already seeing a gradual increase of foreclosures on a state by state basis. This is a little bit more accurate map of up to the date. You can see that roughly Ohio's increased by 9%, started to pick it back up compared to other states are at 0%. Nothing as high as South Dakota right now at 50%, but 9% is still a gradual increase in foreclosure actions happening. And this is for the week ending of July 11th. So this is about a month old. We'll get a new map on this here in the next day or so, but you can start seeing increases in foreclosures are happening. Now, we all talk about a forecast of this huge tsunami of foreclosures as more and more mortgages sink underwater or as people get further behind in their mortgage. A lot of these government loans, people are taking forbearance agreements out for 6 months and then they're hoping things be back to normal. Hey, they'll get back to work. That 6 months just goes on the face amount of the loan. That's great. But in a lot of cases that when you've lost your job or you've had to close down your business or you don't have a government-backed loan, what's there to do for you? You can't keep hoping that the bank or the lender is going to keep kicking the can down the road, or the landlord's, oh yeah, just stay rent-free. I don't have a mortgage to pay in my house. It's going to get difficult. So where are we going to see the foreclosure of the pandemic? Well, if you get to where and what type of loan default rate you have, here's kind of what we're talking about. You see FHA loans, these are your first-time home buyers for a big chunk of them because they're getting down payment of 3.5%. And a lot of the banks beforehand were paying the down payment and also paying closing costs. People are getting in with 0% down. Okay, that's at almost 10% default rate. All right, compared to your conventional loans are at 3% default rate, and then your VA loans are at 4.65, followed by your other type of loans are roughly 4.3, 4.4%. We'll probably see that number continue to tick up here, but on average across the board, this is where the blended rate comes in at about 7.76% compared to that. We'll see it drop down or we'll see it go back up. It's going to vary on a state-by-state basis, on what's going on. All right, we all know about forbearances increasing, people taking them out. We still see about 4.6 million borrowers out there struggling. As I said before, they still expect there's another 4 million people out there that haven't reached out for a forbearance plan because they're too scared to pick up the phone or they've been skating by. Remember, 1 out of 10 borrowers was already 30 days behind roughly before this whole thing kicked off. Okay, now is this good news or bad news for us as investors out there? Well, the beautiful thing is Ohio as a whole has a lower than national average. Okay, Cleveland though, the higher unemployment rate than the national average, you have to expect the rate to be worse in Cleveland than other parts of the country, or sorry, other parts of Ohio with a higher unemployment rate. Okay. Now the thing is, Ohio does have you a little bit of a longer foreclosure time frame. It's a non-judicial foreclosure. If you're going to take an FHA foreclosure, it's 510 days to foreclose. Hey, guess what? That's 1.5 years. Okay. That's great if you're the borrower. Not so good if you're the landlord or you're the guy that's got borrowers in places or you're the bank. Okay. There's a backlog of forbearance agreements out there. It's going to drag things out even further. If you're a residential real estate investor, hoping you're going to find some deals at the foreclosure auctions that are foreclosures or real estate owned assets, it's going to take it's going to take 12 to 18 months before we ever see any of that in Cleveland market. Okay. That's on the property side. Now on the note side, you'll see a lot of that hitting here relatively soon. We'll talk about that in a second, but let's talk about the commercial debt. Commercial markets are also in an uproar. Obviously, you've already seen a lot of for rent signs, buildings boarded up, businesses going out of business, major employers, major companies filing for bankruptcy. I've been saying that the commercial market has been way overvalued for the last 2 years. We now know that has been accurate. And if you look at the asset classes across the board, you can see what's being hit the hardest. Your hotels, motels, roughly 26, 27% default rate. Your retail is upping and beyond 15%. It's probably closer to 20% when this chart comes out next month for the July. Office is obviously taking a hit. Student housing is also taking a hit as colleges aren't coming back. It's commercial, there's a lot of opportunity commercial out there. Okay, what's not on here is the restaurant space. I think that's ranked in the other side of things, but restaurants are roughly about 15% vacant. You also have rents being reduced across the board for a variety of reasons. Okay, obviously increased vacancy, you got to drop the rent down a little bit. You also expect the vacancy factor to go up. So you're going to have to expect, you're not going to get for commercial property what you got today. You got to expect it to be at least 80, 85% of what people are getting, 2 months ago, 3 months ago. Cleveland has been hit pretty hard by mortgage-backed defaults. Not the biggest market, but still 550 million in CMBS loans, a 20% default rate. That's the thing Cleveland's got a higher default rate for base what's going on out there. Okay. Now you see it all is dependent on what you see. Yeah, obviously 20% to 550 million. That's not the same thing as like New York being at 7 billion or LA being at 2 billion. We get that. But that still doesn't mean you're not seeing stuff there and people are being affected by it. Cleveland, if you live there in the market, hey, maybe an opportunity to come in and pick up some commercial real estate at a reduced price, well below market value, because there's a lot of things that are happening out there. Hotels are struggling. There's a lot of deals being taken place that you're not being disclosed because it's being note sales. We see this happening all across the country. And for some reason, my slide's all goofy. When you see hotel transactions down 75% from last year, and a lot of hotels and properties being all cash purchases where the price isn't disclosed, hey, it's the note sales. Banks are looking to sell notes, the defaulted notes on hotels, motels at big discounts because there's such a glutton of it, well below their pre-COVID-19 valuations. There's a hotel in New York City, $260 million mortgage that the bank of the fund that owns is willing to sell for less than 20 cents on the dollar. So you're going to see some amazing deals. We all know the commercial mortgage-backed security market lost $50 billion in value, basically in March when everything hit. It's going to get a lot worse. Now, it's going to be a lot worse this time around for your local banks than it was 12 years ago. Previously, your CMBS guys financed a lot of that bigger stuff 12 years ago. It was roughly about 65% of what they financed. Well, now, for the last couple of years, your banks have come up to the table, pulled their chair up, and they've gobbled up a lot and financed roughly about 56% of what's actually in distress right now. Now, the thing with banks, and here's the thing that you got to keep: banks aren't going to finance 100%. It's not like a single family home will finance 90% of it, or 95, 97. They're only willing to go, depending on the asset class, like 70% at the max. They want you to bring 30% of some sort, either carry back or cash. Well, when you have reduced rents, okay, or vacancies, value on a commercial property reduces dramatically when rents go down, okay? And the bank wanting to be at that 70% of LTV, when the value drops 20 or 30%, they're going to turn around and go to the borrower and say, hey, we're giving you some time here, but you need to bring 20 to 30% to the table to pay down your loan so that we're not above 70% or 65%. Now, what's going to happen? Investors aren't going to, or borrowers aren't going to fork over that money. Apartment complexes, student apartment complexes. I've talked to a buddy of mine, and he does a student housing across the country. He's only collecting roughly around 50% of his rents. That's going to reduce his value down dramatically. Now, the banks are playing ball with him right now, hoping that where he's at will recover here as colleges open back up and things like that. But if you've ever been a multifamily investor, I would be looking in college towns and looking at the banks that are financing this stuff, because that's going to be a big bloodbath. You're going to see a lot of opportunity, and the play on this is to bring some capital to the table, buy some of this non-performing notes, become the bank, and work out some sort of payment plan, or helping the borrowers reposition the property, if it's not like an apartment complex, into something else. And what I mean by repositioning the property, doing some things to get creative. Billionaire Carl Icahn talks about, hey, it's going to get worse than it was in 2008. It's all shopping malls. Banks went out and financed all this stuff on shopping malls and hotels and retail buildings and malls. He expects 1 out of 2 mortgages to stay closed and be out of business. That leads to a lot of opportunities out there. We know that commercial banks have an opportunity to lose $48 billion. Now, I have to be careful about that. An opportunity to lose, while it's not good for them, that's an opportunity that's great for us, okay? And literally about a week or two ago, they announced, Bank of America did specifically, that they expect to lose billions of dollars as a big part of the $50 billion loss, okay? Now, big chunk of this $50 billion loss is B of A. They're going to lose $5.1 billion they're expecting to lose. Wells Fargo is going to be hit hard. Chase is going to be hit hard. A lot of other banks and insurance companies that are financing this stuff are going to be hard, because they were like, oh, commercial, it's a safe investment. Sure, we'll finance at the top of the market. Okay? It's the worst time to be buying. A lot of the guys, not just my buddies, but people that I've talked to and other people out there in the commercial space, say they've never seen as many commercial deals hit desks as they have in the last 3 to 4 months compared to what it was over the last 24 to 36 months. A lot of stuff is hitting their desk. So where are the opportunities? Well, do you want to look at and try to wait around for foreclosures and REOs? No, you don't want to do that. That's going to be another 12 to 18 months or 24 months. And you may never see it at all happen because the banks may sell this stuff off at a fraction of or a discount to somebody else like me or another bank or another institution to take over these problem children and work them out. Fix and flips. Do you want to be in a fix and flip market when prices or values are dropping and financing is tightening up? I don't think so. Do you want to be in the rental market? Hell no, you don't want to be in the rental market where you're the landlord. All right? Not with where the money in the market's at right now, unless you can be flexible or you can work with your tenants in some sort of fashion or be able to reduce rent significantly to help keep them on their property. The real opportunity lies in the debt game these days, everybody. That's where the opportunities lie. Residential notes, you'll start seeing some of the note sales take place here in the fourth quarter. Already starting to see some come across our desk now, but the banks have had basically 6 months by the time the fourth quarter rolls around. They've had 6 months to look at their portfolio, identify who's paying, who's not paying, and allow them to then move the ones that aren't paying off their books before they have to go to the foreclosure route and let somebody else take care of it. Obviously, kick the can down the road and let somebody else play that game. Now, the commercial side, we're already seeing deals, already getting phone calls, already reviewing assets this quarter right now. You don't have to wait around. And it's asset class is the big stuff, but also a lot of small stuff. Okay, big stuff. Hey, here's a great story about a investor in Illinois, okay, in Arlington, who took this hotel that was recently built and turned it into apartment complexes and sold it as apartments versus keeping it as a hotel. He repositioned the asset and did really well. Our buddy Garrison Gilbert, is a student of ours, is doing this in Gettysburg, Pennsylvania, walking a 55-unit hotel and turning it into a 42-bedroom apartments, okay? Taking office space and repositioning it is also a valuable thing to do. This guy in Denver is taking a 107-unit office spot and turning it into self-storage facility. Brilliant. It's already 10 by 10, 7 covered parking spots. Brilliant, because there's a big need for self-storage in the downtown market when it comes there in Denver. That's smart. Hey, set it up, boom, boom, boom. I don't have to have nearly as many amenities. Don't need to have as many people full-time for a self-storage facility as I need for an office complex. And I just think it's absolutely brilliant. Now, the biggest opportunity that we've heard over and over again that my friends and colleagues have told me is the commercial assets valued at $2.5 million or less, right? Because that is the price point, especially below $5 million. Your big guys on Wall Street, your big CMBS guys don't really want to waste their time with. They don't want to spend time anything below $5 million. They've got this big fun, cheap money. They want to do something bigger. It's worth their time. That doesn't mean it's not worth our time. Okay. It also doesn't mean that there isn't banks and banks and banks chock full of this stuff. There is. Okay. There's so many banks that have difficulty with this asset class right now and being flexible. They're trying to be flexible and pretend and extend, but a lot of them have the stuff that's eating up their books. Okay. It's going to be the biggest overlooked niche by the big boys, but will also be the biggest drain on banks who finance over half of the current distressed assets the past few years. And if you're willing to do a little bit of work and be flexible and figure out a great way to reposition the asset or to buy the asset cheap enough that by working with the tenants in place, you can still be turned into a really good reperforming asset. Hey, you've got a gold mine. You've got the golden goose. Now let's talk about some of the banks in trouble out there. Every quarter, I buy a list and tap into a list called the Bauer Financial List. It's a independent third party that ranks banks and credit unions on their profitability, their ranking from a 0-star to a 5-star rating. And we check out banks. We don't really track the credit unions because they don't have a lot of debt that they're financing carried, but the banks do out there. And the most recent report came out in June. And in Ohio, there are 81 banks that are based in Ohio. Okay. Now, we all know there's thousands of banks that lend in Ohio and other lending institutions, but actually FDIC banks, there's 81 of them that have a home address in Ohio. And so we take a look at those 81 banks. Between the 81 of them, there's combined, get this, $14.3 billion in 90-day plus defaults. They got a lot in their books, okay? That's a 90-plus day default already, okay? If you break it down across all 81 banks, it averages about 4.2% of each bank as of 1 in 20 of their loans, a fifth of 5% of their balance is basically in default. The biggest, obviously, penalty is the big guy out there. JP Morgan Chase calls Ohio home. All right. They have $8.2 billion in 90 plus days late. Okay. Ouch. As I said, they're taking 2 scoops of the default. Now, not all of that's residential. A big chunk of that is obviously commercial. You're not going to call up JP Morgan Chase to buy a one-off note. U.S. Bank is also the second biggest contributor, biggest guilty party that's based in Ohio. We've bought from U.S. Bank before. They got $3 billion in 90 plus day lates. They make up, between those two, they make up $11 billion of that 14.3. There's a lot of smaller banks that have a lot of other stuff on their books that doesn't fall into that. Like Hometown Bank, they're ranked a 3.5 star. 18% of their total portfolio is in default. So I'm not going to tell you where Hometown Bank is. They have 5 or more branches. I'll tell you that right now. And if you're in an area where they're located, hey, you may have an opportunity to pick some up. Now, we know some of these bigger banks aren't just lending in Ohio. That number is across the board on their whole lending footprint. But hey, if there's stuff there locally, which we all know there is, Ohio, higher unemployment rate than the country. Cleveland has a high default rate, higher than the national average as well out there for you. So why do you want to buy the distressed debt? Well, you start buying debt and doing deals now versus waiting around for that golden goose to show up in 12 to 24 months and deal with the scraps that other banks and lending institutions and other investors have picked through. And you don't want to deal with that, okay? You can purchase the debt at significant discounts depending on the location, the foreclosure time frame, the values, condition, et cetera, okay? Big discounts on bigger issues. Purchase the debt and then control the asset, pick it up somewhere between 30 and 70% of current as-is value or off the debt of what's owed, whatever is less. And you've got a multitude of strategies. If you're buying residential debt, you got about 10 strategies. You're buying commercial debt, you've got a bunch of strategies there as well too. Modification, deedling, short sales, payoffs, whatever. You can take over that note and turn it into cash flow with the performing notes, or you can take it down and control it, the property, net it to your bottom line. Do whatever you want to do with it. Sell it, keep it, hold on to it, reposition it, whatever. You can do what you want to being the bank. That's the beautiful thing, all right? Now, other advantages of note investing, I know there's a lot of people there that are probably watching this that are brand new. Real estate investors, we get a lot of that. You don't need credit, okay? You don't need to spend thousands of dollars. You're not going to drop out postcards and mailing out letters and letters to borrowers or to people on the foreclosure list because you're not going to see them yet, okay? And we don't drop thousands of dollars in direct mail costs. It's a waste of money to get one deal. No. We send an email to bank asset managers. We jump on LinkedIn, track them down, or pick up the phone and dial for dollars. And everybody can do that. And all that is basically free for the most part. Yeah, email costs you a little bit, but not near what 5,000 postcards would cost you. And that's the beautiful thing is when we're dealing directly with the banks, we're not just getting one source for one deal, and we got to go out and do the whole thing over again. We're getting one source that's going to feed us stuff on a regular basis. Quicken Loans. Y'all are familiar with that out of Ohio. I've been getting a quarterly report from Quicken Loans for the last 8-9 years. Every quarter, they send me a list of stuff that they have in their books they're looking to move. Okay? I didn't have to do a direct mail postcard. I reached out to the head on LinkedIn. He put me in touch with the right person, and now I've had that relationship with Quickens for some time now. And I can cherry pick the best deals for my own portfolio, or I can turn around, buy in bulk, and get a little better deal if I want to do that. And it's residential commercials. It's finding deals is the same way. You're picking up the phone, you're dropping emails, you're dialing for dollars. It's a lot of the same stuff doing it. And the beautiful thing is, guys and gals, like I said before, you raise capital from other investors if you don't have the fund of purchases, and you don't have to worry about your credit. If you're in forbearance right now, if you're in default, I don't care. I've been there. I've got the tattoo or the T-shirt, whichever you pick, okay, or the scars. And think about this, everybody. There's 15 million homeowners underwater in 2010, 2 years after the thing rolled out. How bad do you think it's going to be? We're going to see a lot, whether it's single family or commercial. There are opportunities out there for those that are willing to roll up their sleeves and get to work and do some stuff. Are there investors out there if you don't have your own capital? Because that's one of the big things people are like, well, Scott, I don't have $1 million to fund on this retail center or this student housing thing that I found. You know what? Great. Neither did I. But there are plenty of investors out there. There are already $9 trillion in retirement funds sitting out there waiting to be put to work. $9 trillion with a T. Okay? In Cleveland alone, there are 27,000 investors with a self-directed IRA account just in Cleveland alone. Cleveland area, 27,000 people with an IRA, okay? Out of that 27,000, 18,000 of them, 67% have at least 150 grand or more in their accounts. What? That's right. 18,000 of them have at least 150 grand or more in their accounts. Not 18 people, 18,000. How many of those people do you need to reach out to put together $1 million? Not many. If you don't want to raise the capital, guess what? There's 19,000 real estate investors, people that actually on their taxes claim as to be real estate investors in the Cleveland area as well. So you go find the deal from the banks and then you flip it to somebody else and you make your difference. You can wholesale, you can assign the contract, you can make money notes without having to even fund the deal if you want, okay? But the thing is here, guys, do you want to be the banker or the borrower? The pen is always mightier than the hammer. You're already in the note game. Each and every one of you, if you've got a mortgage, an auto loan, credit card, student loan debt, whatever it might be, own LeBron $50 down the street, whatever, okay? You're in the note game. You're just paying money out versus it coming in. That's why the banks are always the biggest. It pays to be the bank because the bank always wins, and you want to be the bank. And that's what we do. When we buy this debt from the banks, we become the lender. We become the bank, okay? No, you don't have to have a lot of fancy licenses in most states. No, there are servicing companies and attorneys to help you do all the heavy lifting out there. You need real estate agents to help you pull values. You need real estate attorneys to help you with the foreclosure process. And there are so many of them across the country waiting for you to give them a phone call, okay? And how do you tap into this tsunami? Well, guys and gals, I've been teaching about note investing, specifically non-performing notes, since 2010, over a decade of teaching investors just like yourself, with people out there with a lot of real estate experience and a lot of people out there with no experience, okay? About thousands purchase their first non-performing note to tap into the world and go on to bigger things. Whether it was residential or commercial, we've done it. When I first started off in 2008-9, I was buying mostly commercial notes before the residential notes hit. Hey, I'm doing the same thing now. We're expecting that. We're putting the feelers out there. We're getting banks to send us stuff. And whether you're looking for cash flow or asset growth, you can do either or both. You don't have to be picky, okay? You can buy one off if you want to do that way, or you can buy in bulk, okay? We've seen trades anywhere from 25 grand all the way up to $5 million and beyond, all right? Cheapest note I've ever paid for was $7 on the note in Jefferson Street, Baltimore, that I flipped for $5 grand the next day. All right. Bought 3 condos on San Diego, on Pacific Beach in San Diego for $5 million. And then we flipped it and made some good money off of those. All right. There's a lot of opportunity. And like I said before, don't care. You don't need your own funds. You don't need to have good credit, or the banks don't check your credit when you're buying the debt. They don't give a rat's ass. All they care about is that a wire shows up that pays for the asset. They can transfer it over to you, and that you've got the right people in place to help you out with that. And like I said, you can start doing deals with emails, LinkedIn, and phone, and being able to jump on the phone and be able to talk that way. So whatever your focus is, I don't care, okay? Single family homes, apartments, hotels, retail office, self-storage, mobile home parks, deals in all asset classes. Don't care what your focus is. You can create truly win-win scenarios and win-win stories, not only for you and the bars, but you for the banks, you for your investors, and really do some great good out there by helping keeping people in their houses, or you can keep companies up and running in their businesses. Just like this borrower here who lived in her house for 18 years when we bought her note. House value dropped because the market crashed 10 years ago. She owed twice on her house on what it was worth. We bought it at a fraction. She'd been trying to do a loan mod for over 4 years. And when I saw that, we bought the note, called her on the phone, negotiated a loan mod in 30 minutes. And she's been paying on it and knocked off 27 years off her mortgage because she just paid off her mortgage just recently. Talk about a win-win for her. Like I said before, you want to see a picture of the $5 million purchase? There you go. There's the 3 condos on Miami Beach that we picked up direct from the Bank of Arizona. Let the developer walk, turned around and sold those all and made a nice penny on those. If you're looking for something smaller, want to take down, hey, here's an 8-unit apartment complex we also bought. Bought it at 50 cents of the value of the property. Well below what was owed, well below the market value, and was able to flip that for $35,000 wholesale fee in less than 30 days. 35 grand, hey, that's almost the median average income of a lot of people in Cleveland, okay? So whatever your focus is, we're here to help. And you can do it big or do it small. It does not matter one way or another. You can be like our buddy Gene here. Started off doing things small, onesie, twosie deals here in his local market in Indiana. Fast forward 4 years after working with us and learning how to do things right. He's raised over $13 million in private capital for his business. He's closed on over 135 assets. Retirement has a whole different look on him. And like he was working full time as a hotshot operator, basically driving cars and vehicles all across Indiana, Illinois, Ohio, just trying to do what he could do. Now he's not doing that anymore. Now all he's doing is buying debt and making a big impact. You also be like Laura Blanc, who's like many investors out there. You go to different workshops, you try to learn how to make money in real estate by wholesaling, subject to deals, whatever you could do to make money to pay the bills. She was like that. She learned about notes from us. She immediately bought 2 notes in her first 30 days. Fast forward 18 months, she bought about another 14. Now she's closed on over 100 deals and is getting ready to close on a portfolio of 148 assets, I believe. Yeah, with other people's money. That's a life-changing experience for you, right? Riches are in the niches, everybody, and this is an amazing, wealthy niche. Ask our buddy Keith Collins there. He's out of Ohio. Mason, Ohio, if I'm correct, just north of Cincinnati. A lot of experience, city governments. I believe was a mayor of a town there in Ohio at one point. Got a lot of experience in real estate, but didn't do a lot in the note business. Learned the note business from us. I got an email from him saying, hey, Scott, me and Lisa are so excited. They made over 7 figures in 2019 by applying what we teach. That's great. I get so excited to hear stories like that. I get so proud for students that are doing big things. But you also look back, we've all got to start somewhere. And I don't care what your age is, what your experience is, you can do this if you're willing to be coachable and learn how to do it the right way. Just like Raphael here. He's out of San Diego. He's actually a business owner, a successful business owner, owned a car detailing business, 15 full-time employees. But when Corona hit, he had to lay everybody off and basically shut the doors. And if he didn't have the note business, because he started learning the note business in November, December from us, in his first 30 days, he bought roughly 5 deals. 2 of them he got modified almost immediately and it turned into about a 20% cash return. The next 2 he's selling right now to double his money, and the 5th one he's still working on. But he's without the note business, he would have been out of work. Nobody wants to detail a car when they can't drive it, and they sure don't want to pay somebody to come over to do it when they're bored at home. So whether you're brand new in this business or you're seasoned real estate, we teach you the simple way to do this business. We keep it simple, KISS, all right? But I've helped thousands and thousands and thousands of investors all across the country in the last 10 years tap into the note business, learn how to buy deals, how to invest. If you're willing to be coachable, I can show you the way. And how did a lot of these people learn? Well, a lot of them learned from taking our training. And we've put together a very special one-day training to help you kind of get things rocking and rolling. No, this is not a pitch fest. No, this is not just a big upsell. It's a one-day impactful training from 9 a.m. to roughly 5 p.m. with yours truly for 8 hours going through the note business. We call it Note Weekend. It is a great way for you to dip your toes in the water to see if the note business is right for you, okay? Our upcoming one is actually in just a few weeks. It's a mini workshop. We were live streaming on Saturday and the replays on Sunday, so that if you can't make it on Saturday, you can watch all the replays that you missed out on. If you got to step away for an hour or two, you don't miss anything. Those are included. Our students call it the Cliff Notes of Note Investing. Remember those Cliff Notes yellow books that you would read instead of reading a full boring book? Hey, this is the Cliff Notes. Read the Cliff Notes, you like it, then come back and attend another training, much more in depth on things. But we usually charge $99 for it. We've dropped the price down to $49. Like I said, 9 to 3, 9 to 5. I'm there as long as questions are asked for everybody. No, we don't have a bunch of speakers. It is me teaching it live with a manual and outline. If you go to noteweekend.com to get signed up, you can see the schedule. You just scroll down. But our next class is August 22nd. The following class is September 19th. All right. In October, I think we'll be hosting our next class, our actual live 3-day class that $49 can be applied to. Now, if that's not enough for you to come and spend a day with me, who's taught thousands of people how to buy notes, show them how to do it, how it's been called the note guy, the note educator of the year in the past. I'll been called the note guy, the note educator of the year in the past. I'll make it a little bit sweeter for you. All right. I got a lot of bonuses I'll show you, but what do we cover? Somebody asked me. Well, we always cover the first part, how to find deals from direct from banks. And by the time that you're done, you'll be able to pull a list over 2,000, 3,000 banks that you can reach out to immediately. Okay. We'll talk about how to fund these deals and how to find investors in your county, local investors to network with and talk with to fund your deals. We'll also talk about the different exit strategies and how to make money of notes. There's a lot of ways, whether you're taking the asset down or wholesaling it or taking a deal down and then flipping it real fast or working with the borrowers. We'll talk about the different ways to make money in notes. Okay. We'll also talk about the vendors and the teammates that you'll need. Besides just the 8 hours of learning, I think there's about another 5 to 6 hours of other video training that we include for you to watch about from the vendors, who the vendors are that you need to have and why they're important. Okay. We'll also talk about and share with you some loan trading platforms that you can take a look at and start looking at deals now, residential and commercial deals now versus sitting around and waiting for 6 to 12 months. And guess what? You don't have to buy from me. There are some people out there like, oh no, the banks won't sell to you, but you got to buy from me. That you're just not smart enough. No, you all are smart enough. Okay. You got to know what to say, how to say it, when to say it, what not to say. Let me go through this and give you scripts to do that in our 20-page manual. Okay. And there's a lot more that we cover more throughout the 9 hours, 8 or 9 hours we're covering there for you. But once again, this is all just for $49. And if you go to noteweekend.com and get signed up today, we'll throw in some bonuses for you. So what we'll throw in, obviously we cut the cost in half from what it normally is. We'll also throw in our 1-day calling banks training. That's right. You can hear me call banks for 4 hours that we normally charge $49 for. We'll get the replays of that, but you can also join us live in August. We're doing the next one, August 26th. Is my next afternoon of calling bank asset managers. We'll jump on also and give you the Bauer financial list, the most recent quarterly one that we have. We'll give that to you. That'll show you the banks from 0 stars to 5 stars, banks that have at least 5 branches more all across the country, names of the presidents, what type of trouble they're in or what their ratios are, how much in single family debt they have, how much in multifamily. That's one big thing. Gives you a lot of opportunity to start diving in and finding the answers you're looking for. That's usually a $300 to $400 purchase is what it costs me individually. We throw that in. I charge $1,000 an hour for consulting. So after I have my training, I always like to reach out to people and schedule a 30-minute one-on-one call with you to feel out where you're at, where you're going. That's a $500 value. We'll also, if you've got a spouse in your household, a business partner, hey, we'll let them watch. They'll get a link as well. We throw the replays in there. That's included. And then, of course, we've got a really amazing Facebook group of roughly right around 900 students that network on a regular basis. It's a great website for asking questions, looking for vendors, looking for a realtor. Great place to network with people that are active in the note business. That's included as well. So all that together is over $1,000 in bonuses. That's all included at no additional cost into the $49 that we're charging for this. So we're not getting rich. My biggest goal, as I said beforehand, is I want to create 1,000 new note investors here in the next 12 months, because what's going to happen? I need people to reach out to. I need people to call the banks that are in areas like Cleveland or Ohio that are looking to buy deals and know what they're looking at, that I don't explain the note business to them. They know when they see a deal and know when to act on it. So I would love to have you be a part of this. Why should you sign up for this? Well, you haven't covered this enough that there's so much opportunity. Never been a better time to be buying distressed debt. You're 12 to 18 months ahead of everybody else, that you don't have any direct mail costs to dive into this. You can email address, you can jump on LinkedIn, can pick up the phone and dial for dollars. You've got 5 or 10 hours a week to put into this. Here's why you should sign up as well. Help borrowers and investors out there. We all know there's neighbors and people out there in your community that are struggling. You've also got people sitting with money on the sidelines that have been laid off, or they have 401ks making nothing. They need some help putting it to work. They should be working with you. Make money helping people solve problems. There's nothing greater than talking to a borrower and negotiating something with them to keep them in their house, or working with that business owner to keep them in their commercial space. But you're still going to come out making money and smelling like roses on the front end. Nothing better than that. And like I said before, if you're looking to build wealth, this is the opportunity for it. This is not a get rich quick. No, it's not a pyramid scheme or anything weird like that. This has been around forever. All right. Dating back, we've had different cycles. A lot of people made a lot of wealth during the RTC, the Resolution Trust Corporations, the savings and loan scandals. A lot of people made money 12 years ago with The Big Short. Now this is your time to take action and get started in rock and rolling for you. We all know distressed borrowers. You might as well make sure and take care of yourself along the way. And like I said, there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream they thought was impossible. What dream of yours have you put on the background? What dream have you put off in the distant? Oh, it's too big. I can't do that. Bullshit. You can. We're all capable of doing more out there, even myself. Is it to retire your spouse? Is it to retire yourself? Is it to take care of your parents, put your kids through college, to take the vacation, to not have to worry about waking up at 6 a.m. and driving to the office and then worrying about getting laid off? Don't you want to call the shots? This is your opportunity. And no, I'm not going to tell you to quit your job. We've got plenty of people, though, that have quit their job in 6 months and 12 months or beyond because they put a plan together that we worked out with them, and they followed that plan to help them accomplish that goal. So love to have you guys be a part of it. Like I said, if you go to noteweekend.com, you can get signed up there today. $49. You're rock and rolling. You'll be sent a link. We do it via Zoom. We live stream it like this. You can ask questions live. Using the last half hour to 45 minutes of the class is networking. So we bring you online, have you talk about your business, what you're looking for. You get to meet other people who are going through the class. Plus, you're put in the group on Facebook with everybody else out there for you. There's nobody else doing this in the note business that has put the business together like I have, everybody. Nobody out there. We've helped so many investors, not only in the United States, but Canada and beyond. We've got investors all across the country that are doing this. Why don't you be our next success story? We'd love to have you and learn how to make some great tasting lemonade that everybody's looking to have out of the lemons that we've been dealt by the country. So love to see you. Noteweekend.com. Get signed up today. Just $49. Get your bonuses sent to you and get signed up this evening. Everybody, if you have any questions, I'm here to answer them for you. We do this. I see a question on here. If you can't make this on the 22nd, don't worry. We do have the one in September. Just let me know. We'll get you to, how long will this sale last like this? We used to have it at $19 and we increased the price to $49. We gave it a couple months ago. No, you can't get it at $19. Get signed up at the $49. It's still cheap, guys and gals, ridiculously. Free has zero value. For those that we have comped in free, less than 10% show up. And I don't want to waste my time talking to people that don't want to show up. So noteweekend.com, you can get signed up, check out the full schedule, get signed up today, and we'll see you all at the top, everybody.